Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator for technology startups in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in search of that mission, in pursuit of that mission, we've been doing these free mentoring roundtables for years and years and years. We started way back when in 2008, and this is the 556th session. The event is being recorded. Every single recording is on our YouTube channel, 1M1M Roundtables. On Twitter, we're at 1M by 1M and at Romana. Hashtag for today is 1M1M. This is a roundtable, not a broadcast. We want you to participate as much as possible. These are the call-in instructions. Today, we're going to start the session with a conversation with Song Kim. Song is the Chief of Corporate Development and Strategy at Chegg, and we are going to get a perspective on exit strategy, corporate development, acquisitions, M&A, and especially focused on the EdTech sector. Song, welcome to the show.
Thank you.
So let's start with a little bit of introduction of your background. What path have you pursued in the industry? And then we'll get into some specific topics.
Sure. Well, first of all, thank you very much for having me on. I'm really grateful to have the opportunity to be here and to speak. I've been working in corporate strategy and development for the past 6.5 years. To me, it's important to articulate my role in that way because the strategy part must lead the development part. The characteristic that most differentiates what I do now versus what I did prior is the strategy part. It's more than closing deals. It's more than yielding high IRRs or even sector-based or theme-based investing. Any acquisition I advocate for needs to support, enable, or extend the strategic growth capabilities of the company I work for. Prior to corporate strategy and development, I spent the balance of my career in technology growth equity, private equity buyouts, investment banking, and before that, investment research.
Fantastic. We are strategy aficionados, as you probably know from our work. We believe in great strategy deeply, and I actually believe that you can cut off a lot of flab and unnecessary, what we call Brownian motion, nervous energy that doesn't produce any movements by doing good strategy, good positioning, good, just good intentional work. So we're gonna dive into that. Let's start today's conversation with some perspective on your current role and what does Corp Dev M&A play in the Chegg world in particular and in the EdTech world more broadly?
Sure. Maybe I can start with kind of how we think about acquisitions and how that really fits into that world you just described. Where I work at Chegg, we typically start at a very high level by asking a really simple question, which is, what's inevitable? Working at an EdTech company, we might say that the skills demanded by employers will continue to become increasingly specialized, that the half-lives of those skills will get shorter and shorter, that learners will seek shorter educational pathways to get to income, and that these pathways will need to equip learners with marketable job-relevant skills, for example. Right? At the same time, what else is inevitable? The ordinary course of daily life will continue to impede access to education. Right? The need to make money to put food on the table, to support your children or your elderly parents or grandparents. So what else is inevitable? Education will need to be less expensive, more accessible, more adaptable, relevant to the jobs that learners actually want and that employers actually need. coming out of our educational system. So and once we answer the question of what's inevitable, this paints a picture of the ecosystem that needs to exist in order to meet these inevitabilities and gives us a sense for the kind of company we need to be to win in that future. Then we build a bridge from where we are today to what we need to become. And the steps of that bridge really become our strategy, which is ever changing, by the way, never static. We think about I'm sorry?
Now, in that process, there are obviously boundaries of like what is the world that you want to play in. The ed tech world is broader than the world that Chegg is playing in. Mm-hmm. So how do you define that boundary? And to what extent does your strategy and M&A work? How do you think about acquisitions play in expanding that boundary?
Yeah, absolutely. That's a great question. When we build that bridge, we need to take stock of what our competencies are, what our assets are, what makes us uniquely qualified or well-positioned to play the role that we believe we need to play. And so we think about the audiences that we will need to serve, the ways in which we will need to serve them, and whether or not those capabilities are ones we have or can leverage, or whether there are capabilities we'll need to invest in to help us get there. So things that extend our capabilities beyond what we currently offer to our existing audience. So extending those capabilities that we can serve them, and to expand our reach beyond our current base to a broader audience, whether that's on the basis of territory or a different demographic, someone who is further downstream in terms of their journey through their lives, and whether or not we should be fit to serve them, and whether we'd be best positioned to do that. So to that, as we continue to zoom in and establish some of those guardrails that I think you're asking about, we ask really simple questions. In addition to the simple question of what's inevitable, we ask ourselves, what problem is it that we're looking to solve? Is that problem big enough to matter? I.e., does it influence enough people? Is it a pain point that impacts a large aspect of our society and our audience base? And how do we define success? And as we go about the process of answering those questions, we tend to converge on a good view of what are those things that would really move the needle for us. What are those things that are outside the scope of what we should be thinking about, and what is in scope, and how do we do it? Do we build it? Do we partner? Do we buy, etc.?
Let's do some examples. What have you been up to in the last few years that illustrates some of this framework thinking?
Yeah, absolutely. So the most recent acquisition that we've just announced, which was just over a week ago at this point, was the largest acquisition we've ever done in the field of language learning. And so as a company that had its humble roots as a textbook rental business that had embarked on a massive transition to digital, right? All of that journey has been, I think, highlighted by the fact that we bet on the inevitable, right? The move towards digital learning, the need for democratized access to on-demand, affordable, self-guided content as a companion to the learner who's taking their educational journey. And as we've evaluated the questions around what's inevitable, the success of any solution that seeks to do this thing, do this democratization in an efficacious way, we'll need to be able to do it on a global basis. We'll need to be able to do it to address the hundreds of languages that are spoken, the various territories that learners reside in, systems, the educational systems and the employment systems that those regions rely on. And so there came a point where we realized that we need to make a meaningful investment in the ability to teach languages, not simply English or not simply Spanish, but language pairs, teaching Spanish speakers how to learn French, teaching Italian speakers how to learn Mandarin. And so We really evaluated that against the very simple question framework that we laid out, which is, what's the problem we're solving for? We're solving for the ongoing educational demands and the marketability that learners need as future employees of multinational globalized businesses. The tendency of businesses to seek connections. My apologies, someone's at the door. But someone, the need for businesses to be able to connect their various branches, their regions, their retail stores, whatever it may be, the need for, gig economy workers to learn the language of the locale that they're currently residing in. And so there's this confluence of need and problems that we're solving for that are big enough to matter, and a definition of success that is coinciding with the platform we think we're investing towards.
So, Song, one observation as you're speaking that I am picking up is that you are changing or broadening your target segment, right? The textbook
Right.
world is K through 12 and higher education, whereas you are now talking about the workforce. I hear the word workforce a lot more, and so language learning takes you into a completely different segment, target segment. Is that a correct observation? Is that an intentional broadening?
I think you're right. So we've always characterized our mission as perpetuating and connecting the learning to earning journeys of the learners, right? 84% or more of students routinely report that they enter into the higher educational system to get a better job. A fewer percentage of people report that they go into higher ed for the academic pursuit in and of itself, for example. And so if you look at the world of language learners, right, over half of US college students say that they need help in learning another language. And if you look at the user bases and the adoptees of language-based platforms, whether they're apps or other forms of learning, a quarter to a third, depending on the countries and the regions of the world, say they're doing it because they need it for the purposes of education. So it's not simply to be a compliment, but it's also to yes, please. It's also to, my apologies. It's also to reinforce and to create the revenue synergy opportunity for us to be able to offer what we currently offer in other languages and vice versa, to help and to seek out and to discover other people in other territories that could benefit from our products if we were to be able to deliver the services in a manner that was resonating with them.
Is the driver in that acquisition strategy upselling from your current user base, giving them more products to get into? Is that what you're
Yeah, it actually serves the two purposes I alluded to before, which is it expands the suite of products and services and support we can offer to our existing base, but also extends our addressable market and our audience that we can deliver our products and services towards. And so, you look at the other three quarters or so of language learners out there in the world that engage with this platform or other platforms like Duolingo, for instance. Then they're looking at learning for work, right? So let's say approximately a quarter of the people who are learning languages say, well, I'm doing it because I need to be able to do my job. I need to be able to speak or understand or be somewhat competent in a language to be able to do my job. And so now you start seeing this extension beyond just the educational context and following people throughout their journeys into their careers. And then you always have those people who are just simply learning it because it's leisurely, it's fun, they're planning on traveling, etc.
So what is the size of your install base, let's say? Chegg has been around for a while. What is the size of the install base?
We have I would say we have several million paying subscribers. And in terms of the users of our free products, I would say it's an order of magnitude greater than that. Yeah.
And the acquisition, talk about the acquisition you made. What in language learning? What what percentage of that subscriber base, whether it's free users or paid users, that you are looking to convert by bringing this new product suite in?
Yeah, we're certainly assessing that opportunity. You know, as a public company, I have to be careful about what I'm able to disclose. However, you know, what I can say is that there's a meaningful opportunity for us to bring this capability. And why is it so useful? It's useful because we know that students as well as employees are looking to brush up on their language skills to gain competence in various languages. We know that the contextual impact of adding language learning tools and capabilities to our product suite enhances the stickiness of our product, increases retention, and drives reasons for engagement that simply span beyond the need for academic support. And so we think that we're creating a Chegg for all seasons, so to speak. Not
so
only
the reason I'm trying to have this conversation along these lines is so that people listening can understand how an acquirer thinks about acquisitions targets, right? So, you know, one premise in the case of this is a B2C play, right? Chegg is a B2C play. In EdTech, there's an existing installed base of users, both free users as well as paid users. And one of the ways a company like Chegg expands its footprint is by bringing in another company that will help them monetize that installed base. So in EdTech in particular, I've looked at several companies that have very large install bases and a very large free user bases. EdTech, for some reason, has come from a lot of free user kind of dynamic. If you look at Course Hero within the EdTech space, huge install base of free users. So at this point, as public companies, these, Course Hero is not public yet, you guys are. So these companies need to figure out how to deliver quarter after quarter of significant growth, and that means some of that free user base has to be monetized. And I think that thinking is quite prevalent in a lot of the B2C businesses that have come from this freemium, lot of free users kind of dynamic. Is that a correct observation, Song?
Yeah, absolutely. I think you're hitting the nail on the head. You know, to make the conscious decision to serve this audience and to be a direct-to-consumer business at that, right? Not going after the deep pockets, but really the people who need the help. You have to have a perspective on how to deliver overwhelming value to the consumer. And to be able to do that at scale, you need to be, in my view, you need to be part of a platform that can benefit from the network effects of adding a capability that can then be disseminated across the platform internationally, globally, if possible. And so absolutely, I would agree with what you said. And the other thing that, you know, I think is a unique challenge is people and companies in the past, you know, large and small, have often prioritized the free aspect of freemium and said, let's worry about monetization later. Let's go get all the users we can. But haven't quite, which is not a bad idea, but haven't quite finished building the bridge before they start walking across it. And so having an understanding or at least a plan of attack for figuring out how do we convert free usage and engagement into value-added services that people are willing to pay for, I think that's a tough question to answer for many companies.
And what have you disclosed on valuation on this most recent acquisition? And in general, how do you think about valuation? How does valuation play into your acquisition decision?
Yeah, sure. So the valuation of this deal was approximately $436 million US. This is a company based in London and Madrid, so the transaction was denominated in different currency. You know, when we think about valuation, you know, it's obviously a key factor that impacts whether or not a deal gets done. But it's not, or at least it shouldn't be the most important. And valuation I see as a dependent variable that is influenced by a multitude of factors, some of which founders can influence, and others they can't. Outside of the general ability for an acquirer to pay, the particular set of reasons an acquirer is interested in the business changes the way it ascribes value to what they're acquiring, whether it's the people, the brand, customers, or the IP. It really depends on what you bring relative to what the acquirer already perceives itself as already having, right? It also depends on the acquirer's appetite, right? Is the acquirer's appetite to hit singles and doubles all day, right? Or is it to swing for the fences? And for that particular initiative or for that branch of the strategy, where does the acquisition fit into that risk reward equation? Right?
So in this case, in the Busuu acquisition, you have paid $454 million to acquire the company. That almost inevitably predicates that there is a significant revenue that you're bringing into through this acquisition, yes?
We think about not only the standalone forecast of the business, but we think about how we can continue to bolster that, how we can continue to drive the unit economic efficiency of that. And I would say the last layer we think about is how we can enhance that. And so, in my experience, when an acquirer is too focused on how they're going to make changes starting day one and less focused on truly understanding the business and the team and how to work with that culture, it doesn't always lead to success when you're blinded by how else you're going to go get revenue starting day one. And so I think we try to remain very vigilant and sensitive to enabling the success of the company in its current form, while continuing to do research and to learn and experiment around the best ways to add value to their consumers. It's not just about hiking up prices, for example, right?
Well, I think the way people listening to this should think about such acquisitions is that the current revenue model, current revenue plan, and business processes need to continue to function after the acquisition. But then obviously there is leverage. There is this huge mass of customers that potentially can be monetized, and you need to create the bridges of how that customer is exposed to the new offering and how that converts, how that,
absolutely,
how that accelerates the growth of the company. So that's in the case of larger acquisitions, in which case this would qualify as a larger acquisition. What about smaller acquisitions? Have you done smaller acquisitions from Chegg?
We have. We've looked at acquisition from a variety of dimensions, right? The question becomes why? Why would we look at the particular acquisition? We tend not to look at acquisitions, one-dimensionally. So does it bring us the reach? Does it bring us an extension into a market that we would otherwise have less of a presence in? Does it give us a technology capability or a defensible set of IP? And mandatory in terms of going with any of those factors is, does it bring the team? Does it bring a team that's committed, capable, and not only extrinsically motivated by the exit outcome, but intrinsically motivated by a sense of ownership and pride in the business and the willingness to grow with it over time?
In the smaller acquisitions, the team is really, really important.
Absolutely. Absolutely.
And in the smaller acquisitions, what role does valuation play?
Yeah. Again, I'm going to start with a disclaimer that it really depends on why you're acquiring the business and what you're ascribing the value of the business to. The role of valuation is always prevalent and important, but I think it really the needle gets moved by the conviction that an acquirer is able to build about what it's acquiring and the future state of that team, as well as that business, product, service, or technology, whatever it is. And so, again, when you're talking about smaller check sizes, the acquirer tends to focus on, the simplest form of consideration it can, which is cash, along with, some equity incentive to continue to grow the business. in whatever form that may take. But you're right, you don't have the company wondering, you don't have acquirers wondering about what its currency is worth. For instance, in a large acquisition or a large merger scenario, there's a whole nother set of considerations around what is the value of my currency, what's the value of my stock, how do I think about that, how do I weigh the cost of debt against the cost of equity against the valuation. And so I think when it comes to smaller businesses, it's really about what is a successful outcome for that team, given the business or the products that they built. How much conviction do we have in the additive capability of that and its ability to integrate into the longer term roadmap and strategy of what we're trying to accomplish with the deal? And what is that worth to us? And that last question again.
Can you do an example? I think we have time for one example.
Yeah, of course. So we acquired a company a couple years ago, and it offers an equation solver. And so students, very lucky students these days, have the luxury of being able to type in a formula or point their cameras at a math problem and get step-by-step coaching and solutions on what rules to apply, what concepts, what numerical calculations. And so these two founders had bootstrapped the business for 20 years. And there are some uniquenesses of bootstrap businesses. One is it's likely that the company exists because the founders are intrinsically motivated, had a problem to solve for themselves, found a very novel solution, and are deeply vested in the long-term success of the business, right? There's a lot of confidence to be gained by knowing that it wasn't just an outsider who made the economic decision to be in the driver's seat. Right? So one thing I would seek I would seek and I sought to understand is, are they trying to take the business to the next level, or are they just tired? Right? It's okay to be both. The job isn't easy, right? So trying to understand the why and the how around the opportunity, and the real kind of orientation of the founders in terms of the growth mindset, right?
And how much revenue did they have? 20 years bootstrapping to what level of traction?
I would, unfortunately, I can't disclose the exact number, but it was a meaningful amount that led to a valuation in excess of $100 million.
Okay.
And so, it was run. That's the other difference of a bootstrap business, is that it's typically been run with capital efficiency and operating discipline. Sometimes, depending on the deal, to the point of conservatism. And that, I mention that because it's a double-edged sword from my perspective. On the bright side, what you see is what you get, which is a high-quality, stable business with very competent operators at the helm. On the other hand, it could have been a business maybe that could grow 10 times faster and won the race towards market leadership if allowed to breathe more freely. So one of the questions,
which is the case for your acquisition, right? That is what, by putting in more of that marketing throttle and leveraging your existing customer base, you can grow much faster. That is the rationale for acquiring such a business.
Yeah, and so doing that is a clear opportunity, but also to have the conviction to be able to do that with this team and with this company, we undertake a very deep, or as deep as we can, an assessment of the founders, their growth mindset, and the way they would think about investing. So one of the many questions I might ask is, if I tripled your operating budget, how would you spend it? Right. That answer is important to me because it gives me a sense for how the founders think about investing in growth, whether it's in pure dollars or people or otherwise. And sometimes the thought hasn't even occurred to some founders because that's not the world they live in. Right.
Yep. Now, did the founders stay with the company after the acquisition?
Could you repeat that?
Did the founders stay in the company after the acquisition?
Absolutely, yeah. We of all the deals we've done, which have been dozens up to this point, there's only been one acquisition that we have done where the founder did not stay with the business for a multiple year period afterwards, and it was a sub $1 million deal, to be quite honest with you, and it was done for very specific reasons. But one of the one of the reasons we acquire businesses instead of build or partner for them is that, one, we believe they will be a core part of the fabric of who we are going forward, and two, we don't believe that we can do it better without them.
Mm-hmm.
And so, that value proposition, I think, needs to come out through the dialogue that occurs early on. Just, are our visions converging, and why are we best positioned to partner up? Right.
Very good. Song, one thing I would be very interested in doing is a story on this company that you acquired that was bootstrapped for 20 years and then they exited to Chegg. If you are open to that, please make the connection and we will invite them to tell their story from their angle and how they'd spent 20 years bootstrapping the company.
Yeah, absolutely. I'll let them know. Yeah, I'll be very happy to do that. Yeah.
Well, very, very enlightening. We'll continue the conversation. We'll have you back, and we'll continue now with some of the mentoring work, okay?
Great.
Thank you for coming.
Thank you for having me.
Very welcome. Folks, we're going to switch to the entrepreneur pitch session. As you know, this is a safe working session. You don't need to be nervous. We're on your side. We're going to be working with you, helping you figure out how to put one foot before the other. There's no other agenda here. So don't be defensive. Just be, get down to work, roll up our sleeves and get down to work. Claudia is first. Claudia is actually a member of the 1M by 1M Premium program, and we're going to be working on her business. She's been working with me for a while now, and we're just going to continue. So Claudia, to start with, for the room, please introduce your business, tell them a little bit about what you do. If you want to do the full pitch, that's fine, whatever way you want to do, but definitely level set with the group. Don't jump to what you want to work on with me without setting context.
Sure. So, good evening here, maybe good afternoon to everyone. I'm Claudia Giannoni. I am the CEO of Rely. I founded this company a few years ago with my co-founder. He's in investment banking, and his experience is in capital market. My experience in real estate. Now it's basically more than a co-founder, is an investor, so we are bootstrapping the company. What we are doing, Rely, it's a real estate marketplace where basically we want to facilitate real estate transactions, and we want to make the process of buying and selling properties and renovating properties easier, faster, and a bit less complicated across countries. So we are now focusing on the UK. We are based in London. So our startup is basically also answering a UK government call for action to make this process faster and cheaper, because at the moment is considered as stressful as having a child or getting divorced. So it's quite stressful and convoluted. So at the moment the process, it's complex, it's time consuming, it's fragmented and opaque. So you basically do not know where you are in the process generally, what you have to do, why there is a delay, and who you need basically to call or to chase to make it faster or to make it happen. So 25% of the transaction fails. There is a lot of money wasted, and there is a lot of time wasted in this process. Rely tries to facilitate this process. So from when the offer is accepted, so when the two people decide that they agree to buy or sell the property, until the completion. So from offer accepted to completion, Rely is where basically we intervene to facilitate the process. Our customers are all the people who want to buy and sell property or renovate the property. Our users, sorry. Our customers, our paying customers, are all qualified real estate professionals, such as valuers, architects, engineers, because Rely is also a marketplace where people can find all the qualified real estate professionals they might need to buy, sell, or renovate a property. generally you will need a valuer, an architect, or someone. And in UK, for example, you need a conveyancer, so a solicitor, so to buy and sell a property. So this is where we are.
So the big difference that you are doing here is it's not a transaction of the property sale. That is not the kind of marketplace you are. It's not a buyer and seller transacting and you're taking a commission. You are actually facilitating the renovation work and the deal. There are all kinds of service providers around a transaction, and that's what you're facilitating. Is that correct?
Well, we are the transaction when people buy and sell a property, a house. There is a moment where people decide that the offer is accepted. From that moment until you really can get the key is what we are working on. Doesn't mean that the transaction of the property doesn't pass through Rely. The transaction of the property, it happens normally. I mean, they can exchange money somewhere else because you're talking a huge amount of money. The transaction that you're talking about in the marketplace in terms of the business model is the contract between the professionals. This is where our fee and our subscription fee come from. But the transaction of the property is what we want to facilitate, and what we are trying to facilitate, transaction of the property and renovation of the property. Did I answer the question?
So my point is, there are all kinds of real estate marketplaces where a buyer puts a property on and a seller buys the property, and the brokers work within, real estate agents work within that system, or these are online real estate agencies, basically, like the Trulias of the world and so on.
Yeah.
So that's not what you are.
No, we are working, we can work with them. Potentially we are our partners. We don't do listing. We don't do, people could not come to us and list their property. They have already done with their own estate agent. The estate agent generally, when they start the process, so actually people have done their job, they found the house. Now the estate agent wants to basically finalize the acquisition, the transaction, and get their fees. This is where we facilitate the process. So if we are working with a estate agent, they can get their fees faster, and the buyer and seller can buy and sell faster and cheaper than before. So this is why people should join us. For people, it's free, it's more transparent, they get an understanding of the process, they don't have to pay anything. Professionals, they get a higher business volume. I've done this work for many years, and you can get quite a lot of business without moving from your home. So you simply get in valuations and building surveying and similar activities. So it's quite interesting to get access to a huge, potentially huge market. The environment is trustworthy, so we check the professionals' history, their qualification, and their portfolio, what they've done. We do the same with the users, so we obviously don't check their portfolio, but we check their identity, and we have an API with the CreditSafe to do exactly the same checks that estate agents do on their customers. This is more or less how it works. Professional joins Rely, and buyer and seller join Rely. They have a marketplace to find their own professionals, and they have a tool. It's a management tool that tells you in which stage you are in the process, what you should do. You can create tasks, or you can use the predefined tasks that they are in the platform. The tasks are country specific, so they are attenant. They are specific for the country, so we are not giving generic information. They are specific for the country. The phase is the phase and the structure respects what the professional body have already established for the transaction. In UK, it's quite strict, so we are simply giving people a tool to facilitate, to make it faster within the current frame of regulations and behavior. People don't need to change their behavior. We don't require to use Rely people to change behavior. Like, for example, it happens when you have online auctions. People can be scared to buy or sell a house through an auction online. Rely doesn't require anything like this. So it's quite easy for people, let's say, to join and start working. Yeah, these are the advantages. It's transparent, so people understand the process. It's a money saving solution for the users because they don't have to pay anything. We charge a professional with a fee, subscription fee, and also with a small fee for each contract that the professional basically gets to rely. So it's a small percentage that when a professional gets hired, goes to rely. We build trust. Oh, sorry, don't worry. The company is regulated. We are partnering with RICS, as you can see from the logo. We just obtained their approval to work with them, and it's a huge achievement for us because RICS is a very respected professional body who is everywhere in the world. I am a member too, so it's in the US as well. So this will help us a lot onboarding professionals, and also people will trust the platform much more than not just like another platform, could be, for example, Fiverr or Upwork, where they are freelancer, but it's not really a regulated platform for professionals. So because we are talking about buying and selling or doing kind of significant work, we want something a bit more like accurate in the checks and in the trustworthiness. So these are more or less our competitors. We have other companies who are acting in real estate. They have, compared to Rely, they generally don't offer any solution for the renovation. Sometimes like Offer.io or Coadjute, for example, they require quite a significant behavioral change from people. There are other companies, for example, who offer a little, like BioMyChain, they offer kind of management tool. It's not as detailed as we offer because we go very much in depth in the process, while generally BioMyChain or even Propy, they have a kind of general, let's say, process divided more or less in big milestones. We go very much in detail. You can check your task. You can really understand which document should be uploaded and why it's not there. So our basically competitive advantage is also that we,
so
in terms
Claudia,
of
one
revenue,
thing that I need to point out to you, you have used this black on blue lettering, which is absolutely unreadable. I cannot read at all. You've done it in previous slides as well. If you use dark blue, you should use white lettering, otherwise it's not readable. So I cannot tell a single one of yourself here.
Sorry about that. That's very strange because I see this for the first time as well. In my, it was much lighter, but I will not do this again, definitely. So, that's strange.
So,
but anyhow, basically what we see. Yeah?
So what kind of a software company, this Coadjute, what kind of a software company is that? What do they do? What do they provide?
They use blockchain to integrate the system that take part in a transaction, like the searches, like the land registry, and all the basically actors. They integrate this with the software, with blockchain. I don't know exactly how much they go. How far they could go, because there is a regulation that cannot be changed, and there are regulations which basically prevents you from using blockchain entirely to put the full potential. So I have had few meetings with them, and I know that they're using blockchain. I don't understand exactly because they didn't really go in that detail how much they're they're able, not willing, to use blockchain to that extent, and how much the land registry, for example, is willing to participate and get involved, because otherwise I don't know how it can work. So this is what they do. It's more a service. In theory, we could partnership with them. They're not really competitors if we can, because
but to do that, we need to understand them better. All right, let's talk about Zoopla. What is the basis of a potential Zoopla partnership? Yeah.
Okay, Zoopla is basically they are online estate agents. So they do the listing, And then they get also, if they want to manage the transaction, as we mentioned before, they get their fee once the transaction is done. If we can accelerate this process, of course, for them, it's an advantage as well. And from a few meetings that I had with some people, I understand that Zoopla, for example, they were not extremely efficient in the management because it's extremely time consuming. It's generally it's done offline and not in an organized, digitized way. So what we can offer is a tool that can be useful for their estate agent, so they can go to the transaction and close it faster. They can also, when they recommend a professional from the marketplace, they can get a fee. So there is a little bit of revenue that can, it depends on, I mean, of course, it depends on how much, how many professional, but this is a simply normal thing that happens even when a estate agent recommends a professional. There is always a fee behind that gets basically someone gets to from the professional because they recommended him. So it's just something that it's in practice already generally. They also get a transport environment. So I think people would be very confident to access the marketplace with the professional and then potentially can open new market because it's easy
so,
for
Claudia,
people to. Yep.
No need to read the slides. I just want to leave you with one thought on this. What is the key reason why Zoopla would partner with you? Not a list of reasons. I want one reason. You're not really, at the moment, you know, the volume, they are bringing a lot more to you than you could bring to them. The fees are going to be nominal. It's not interesting. But if at this stage, given the disbalance in your size and your, you know, ability to offer them something, why would they want to do this? My guess, and this is my hypothesis, I will share with you my hypothesis, you need to tell me whether that makes sense. Can you meaningfully speed up a transaction?
Yes,
that they get from finding the leads to getting, you know, significant revenue of that transaction. Can you meaningfully speed that up?
I can, I think, because I studied the tool with estate agents. So they told me exactly what they wanted to see in the platform to basically have a real improvement in their daily work. So I didn't do it on my own. So this is why I think there is going to be a significant benefit for them, for whoever has to manage the process to work with us.
So if I were negotiating a partnership with Zoopla, I would kind of focus on that because right now, this long list of, you know, you can't really bring a lot of these things to bear. Whereas if you can meaningfully establish that, if they'll ask you to do a pilot, they'll ask you to show you how you do this. Can you actually show that you can do this? And that would be a kind of like a proof of concept pilot kind of thing. You will have to show that you can meaningfully accelerate the transaction from, you know, X number of days to Y number of days, and that's a order of magnitude improvement in how fast revenue kicks in gear. That, I think, is of value, and that may not be something that they already have in place, so you have a case for inserting yourself in the middle of that transaction and showing value. The question then is, do you have, in where you are right now, where your technology is, where your marketplace is, are you in a position to do such a proof of concept, execute on such a proof of concept?
At the moment in the platform, we have the buying and selling process, and I have the renovation. Though I have to add, I need 1 month to do the estate agent flow, which is basically, it's done in the, I would say the prototype is done. They have to transfer it into the platform. And we had to pay them some money. So because we are bootstrapping, I had to 1 month of delay also for the promo that I mentioned you about the team. So in 1 month, more or less, we're going to be able to introduce in the platform the agent flows, because they need this flow to understand. Otherwise, the meeting is pointless. So more or less in 1 month.
Okay. So keep that in mind as you are thinking through how to, if you can bring a Zoopla partnership to the table, that is of huge value.
Yeah.
Now, I can introduce you to Zoopla through DMGT, but then what? Can you make that happen? What do you need to make that happen? What is the core reason why Zoopla would work with you, and do you have the technology to make such a partnership convert? Introduction is not the end of the story. Introduction is just the beginning of the story. After that, you're going to have to execute on that. And how do you do that? That's where I think
Yeah, sure.
Now, again, Claudia, don't put so much stuff on one slide. It's unreadable. These size of lettering is unreadable.
Yeah.
You put 4 slides in one.
Okay. Because I didn't know if I had to, honestly, if I had to reduce the information, but I thought it was, I had to show year by year for 5 years, otherwise it's not believable. So I thought, yeah, I understand. I can spread this.
So for the moment, if this is for you and I to work together, I can't work with these slides because I can't see them.
Okay, I understand. I will send you again the slides, dividing the content in more slides, and I think we can.
But TAM analysis is really important. You're going to have to get your TAM analysis right, and I would need to work with you, but I can't work with you unless you can show me. I mean, I can see.
Yeah. Here. I will work on this. I will send you something there, something bigger.
Don't send me. You have to work with me. We have to do this in roundtable. So when you come to the next roundtable to do this together with me, you will need to bring slides that I can read and I can work with you on.
Oh, sure, definitely. I will do this for next time, definitely. Sorry about that.
Yeah. All right.
So the last one is about the roadmap and how we think we are going to go towards the development, the full development of the project. So the first phase is almost completed. We are going to complete with the state agent flow, should be by the end of this year. The next year, we should focus on start working with machine learning and artificial intelligence, because I think there is a value in guiding people's choices to make the transaction faster. It's going to be significant.
To do that kind of stuff, you're going to need to bring in in-house technology team.
Yeah.
You cannot outsource. I mean, when the moment you get into deep tech, you will not be able to outsource stuff. You're going to have to do things in-house.
Okay.
And that means you're going to need to hire people who have that capability and are credible in those areas. AI, ML, blockchain, it's very hard to find people to outsource this kind of stuff in. It's not like there aren't any. There are agencies that have that kind of stuff, but they're going to be very, very expensive. And, then you're starting to tell investors that we are building real technology and we're outsourcing the building of real technology. This story doesn't work.
Okay, I understand. So for that phase, we will have to have some money. I mean, I don't think we are going to be able to bootstrap that phase then.
No, don't worry about all that right now. For the moment, and what's missing from this is team. That's one of the big weaknesses of this deal, is that other than you, there is nobody else, to show. It's a solo entrepreneur story, and solo entrepreneur stories work if you can show traction. So you're going to have to bootstrap your way to validation and traction, and that's really that is the hill in front of us we have to climb together.
Yeah.
Right. So, and I've introduced you to people to figure out if you can find a technical person, and you told me that Enrica has introduced you to somebody in Italy, and you're talking to him.
Yeah. Yes. I just
what
had a meeting. He has he ran several startups before. He's a technical, he's a founder, and he's in technology. Now he sold his startup, the last one, the Starless company, so just sold it, and he's moving back to Italy. He used to have, because he's built several companies, he told me that he has potential people in Italy as well. So he told me that depending on who you find, they're not expensive. Some of them are quite cheap. So he told me some of them might be useful if they're interested, obviously, in work maybe part-time in the first time to see, because I'm not going to be able to pay a full salary. So maybe work full-time for the first month. And then if they're interested, then when they get some investment, get some money, I'm going to be able to pay them, then to go to a full role as a CTO or something similar.
So he is potentially interested in working with you in this company, joining you as a technical co-founder in this company. Is that what you're saying?
No, he said that he said that he has other plans for life. He's working still for the company that he has just sold. So he's introducing me to other people.
Other people who can potentially be technical co-founders. You're looking for a technical co-founder.
Yeah, this is what
you're
he
not
said.
looking for. I'm just trying to kind of be very clear about what you're looking for. You are looking for a technical co-founder. Otherwise, this company will be very difficult to build. You're not looking for employees whom you're going to pay and all that. You are looking for a technical co-founder, a real technical co-founder.
Yeah, my understanding was that even if of course, I'm very keen to have a technical co-founder, not someone to employ, but my understanding was that without a little bit of money, it's difficult to find someone who is good and willing to put like too much time. So this is why I was thinking.
No, not at all. No, that is not at all a right assumption. A technical co-founder is somebody who believes in the vision and who thinks that what you're doing has legs and is going to go somewhere and becomes a co-founder.
Okay.
Somebody who comes after the money is not a co-founder. That's an employee.
Okay, because I thought it was a kind of a hybrid solution that I had to offer with a bit of both to make people who are good enough interested.
You will not be able to raise money, Claudia. The assumption that the wrong assumption that you're making constantly is that you can raise money. Currently, your deal is not fundable.
Okay.
And we have to somehow mitigate that issue and address the area. So the fact that you are getting closer to where you should be able to do proof of concept with a company like Zoopla or equivalent, that's a good thing, because then you can start showing activity, transactions, proof of concept, validation, and if the Zoopla relationship or something equivalent pans out, then you can actually build a business, a bootstrap business. Maybe there will not be AI and ML and blockchain, fine, but you have a bootstrap business that is in revenue and can finance your operation, and then you can grow organically from there.
Yeah.
That is one path. I showed you the case study of what Nitin has done. Nitin has built a business that has revenues. It's a company that has a lot of customers over a lot of years, and it's not technology heavy, but it has the minimum technology he needs to do the business, which is what you're doing right now. Is put the minimum technology together, minimum viable product against which you can start generating revenues and doing business. Now, if you have to raise money, you have to do more than that. Or you have to get the business to a certain level where the concept is sufficiently proven that you can take it, which is what Nitin is doing. He has all the work is done in an outsourced mode, but it's also, now at a point where there is enough understanding of the business and a clear path of how you grow the business. He knows exactly how he's going to grow the business. And that is compelling. That is something that we can take to investors.
Yeah. Okay.
Okay. So then people will buy the fact that, you've got the minimum technology with which to do this business, and the business is working, the business is scaling. Now we put in more technology, more marketing, more blah, 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 and we can build a bigger business, and this can be something else, something much, much more scalable, much bigger. But that story you're not ready to tell yet because your first step is not done yet. Nitin's first step is done. Your first step is not done yet. So that's why I told you it's a very good role model. What he has done is a very good role model for you as a non-technical founder. Non-technical founders are building tech businesses left, right, and center right now. But there are, specific nuances to how you do that. Solo founders are building significant businesses left, right, and center. But there are nuances on how to navigate that journey.
Yeah.
Okay, good. All set?
Yeah, I think so. And
We'll
we are
work
going to
on
speak
chat
again.
in the next roundtable, private roundtable next week.
Yeah, definitely. I'm going to update and work, and then we speak again next week.
Okay, great.
Thank you very much. Thank you very, very much.
You're very welcome. Very, very welcome. All right. Folks, I think this entrepreneur is a no-show. He booked a slot and didn't show up. I hate that when people do that. That's disrespectful and irresponsible because we turn down other people to give people slots.
Yeah, I understand.
Anyway, so folks, if you like what we do here, bring serious entrepreneurs into 1M by 1M. Refer us to people you know who need help, and that's our ask from you. Now, resources-wise, everything is at 1mby1m.com. You can start with the blog that is very accessible and it's free, and tons of information. The Entrepreneur Journeys book series is also a good starting point if you want to learn from there. These roundtables happen every week. You can come as many times as you want. You can pitch once for free, but you can listen as much as you want. The full acceleration program is 1M by 1M Premium. We give you extensive methodology guidance. We have a full digital curriculum. We help you with business development. We have a tremendous Rolodex. By joining into the program, you get access to that Rolodex. We help you with strategy consulting, and we have a tremendous investor Rolodex. We help you with financing. We also help you with exits. These days, we have done several exits, and that's fine too. So go look at the self-assessment. If you're in the market to raise money, go look at the self-assessment. That's due diligence questionnaire for VCs. Also look at the free bootstrapping course that's available on the blog. You should go through this. It's less than 1 hour. It gives you the philosophy of how we operate. There are a lot of Udemy courses that we have released recently that are also good learning materials, very, very inexpensive, affordable learning material. You can go there too and start learning there. And the 1M by 1M Basic is a curriculum-only option for $99 a month. If you're doing the self-assessment, getting stuck on specific points, you can come into 1M by 1M Basic and plug all your knowledge gaps on your own. You don't even need me. This is a curriculum only, no mentoring, nothing. You just self-train at a very affordable price, and you can plug your knowledge gaps. So that's it. We have, all information is available on the website, what to expect from Basic, Premium, FAQs, video FAQs, description of the curriculum. We are a case study-based program. We teach in case studies, and these case studies are very, very helpful in learning, different aspects of how to build a business. You're learning from masters, people who have done it before, and that's very, very helpful. Investor introductions, the policy is on the website. Please go through it. Our methodology is lean, capital efficient, bootstrap startups, bootstrap first, raise money later. Do not go to investors as beggars, go as kings. I was talking to somebody last week who told me that his friend went to 237 VCs and got rejections from every one of them. And I told him that your friend needs to learn the concept of investor-entrepreneur fit and bootstrap first, raise money later, because if you don't do that, then that is the kind of scenario you run into. And that is absolutely draining. It's a complete waste of your time, and it's completely draining. So please do not go to investors prematurely. That's it. We have one more roundtable left next week before the end of the year, and then January we're back on regular schedule. We're going to have a couple of weeks off at the end of the year, and then we're back in January full force. That's it. If anybody has any questions, I will answer them. Please use the public chat or unmute your line or dial into the bridge and ask your questions. In the meantime, Irina Patterson is your contact to ask questions about the program if you're considering joining. That is all we have for today. So last call for questions. Anybody? Yes? No? Questions? No? All right. I don't see any hands up and I don't see any questions. So thank you for joining today, and we will see you next week. Bye.
Thank you very much. Thank you very much, Ramana. Thank you. Bye.
You're very welcome, Claudia. Bye.